When you think about the fact that over the last 20 years, somewhere around 27% of the payroll employees have increased through the gig economy. This is a shared economy with a number of jobs, and when I was owning a business in the insurance industry, I was paid on commission. There's a lot of fluctuation in the paychecks. Our housing financing system hasn't caught up. The same mortgage payments are due month in and month out. The real question is there a way, as Mr. DeMarco, you've said, creating shock absorbers by looking at savings accounts and other ways? What's the new opportunity for those folks in the gig economy to be a homeowner in this new economy?
Thank you, Senator. I mean, this raises, issues kind of on sort of both sides, right? I mean, the regulations so much about, basic underwriting, qualified mortgage, really have an embedded presumption of a stable flow of income, and yet that's not, where so many households are at. And so there's a challenge qualifying. On the other side, on the risk side, this also lends to greater income volatility. And so as we think about mortgage lending and mortgage risk, this income volatility, which is really growing throughout our economy, more and more households face it, is a risk factor we need to consider and how we're managing to that. So these things, all need to be addressed. In terms of shock absorbers, this is where thinking a little bit more innovatively about products and about how we underwrite can help. And so I'll give just two simple examples, not at all meant to be exhaustive. One is, and the work that Mike Calhoun's group has done really focuses on this, not just about full documentation, it's about where are the reserves and helping families build and establish reserves so that they can weather bumps in their income to pay their mortgage. The other is the mortgage product itself, and not to endorse an idea, but to use it to illustrate that ideas are being developed. There's some economists at the Federal Reserve that are looking at, essentially the equivalent of a 30-year fixed-rate mortgage, but with a savings component to it that actually builds in those kinds of buffers. So these are ideas I think really warrant more consideration, because I think it can expand credit access, but not just access, it can help make mortgage lending more sustainable.
Thank you. In terms of furthering what I call my opportunity agenda, I'm very interested in promoting sustainable home ownership versus home buyership. So this is an important discussion, and thank you for your participation.